It's your boy Zim back with another stock market video. Today I want to go into how you can overcome FOMO. And I know everyone has gone through this where you have the fear of missing out on making profits, or you let something slide so much because you fear that it's going to bounce, and maybe it doesn't. And today I want to talk about how you can overcome FOMO and how I've overcome FOMO. So let's just jump into it. Now, FOMO, for people that don't know what FOMO is the fear of missing out on profits, or the fear of not getting into something at a certain price point. Now, how do you overcome that? Because it will definitely hinder you as a trader 100%, because you will just bag hold. You'll be a bag holding, you know what. And that's where you can lose a lot of money. And that, I know that's where I've lost majority of my money. It's just the FOMO of like, oh man, I gotta be in this, or like you just want to feel included, or you just feel like, oh, there's so much of an upside, I'm gonna miss out, or there's so much to a downside, I need to play my puts. Like, I get it. Trust me, I get it. But you need to learn how to control that, contain it. You need to contain it. You need to put it into a bottle and just leave it there. Ship it off to sea like a letter in a bottle, and let someone else find it, because it will hurt you a lot as a trader, especially if you're trading every day. Now, something I started doing this year to help prevent FOMO is taking very small trades. That's kind of how I'm approaching it. I'm taking very small trades. As soon as I see enough profit that I like, that isn't a crazy amount, maybe like $10, maybe like $20, sometimes 30, 40 if I get lucky. Now, it also matters on what you're playing. Obviously, there'd be bigger profits for different types of options. In this video, I'm pretty much going to talk about like how you can avoid FOMO in options, because options expire. They will go to zero if you are not in the money. Now, you need to protect yourself. Now, how did I do this exactly? So let's just take today for example. Let's take a look at my trades I did today. All right, so I played the Qs today. Very great day to play the Qs. This was a very nice up and down day. You can get into your puts, your calls. It was a very nice windy day. So now, how do you know when to get out? How do you know when you've got to a point where like, okay, I feel like there's enough profit? Do I let it ride? Do I just put a stop loss? Do I just get out? What I've learned just from experience in the last couple of years is that when you feel like you've earned enough profit, you should just get out. Just get out of your position. Don't FOMO like, oh, what if this thing keeps riding? It's not about that. It's about being profitable. Because what if the next 2 seconds or 5 seconds news comes out and then bam, the market just drops, or the market just skyrockets? Like, you gotta be careful, because news drives this market often, very often. And there's a lot of uncertainty in the markets nowadays, so it's kind of a kangaroo market. Now, let's talk about my trades that I did today. I did start with a trade right in the beginning of the day, right in open. I did go with a call because I saw interest rates were sliding around. They slid down. So I was like, okay, I see some potential to an upside play here. So I do correlate a lot of my trades with interest rates, because everything's riding on them right now. So I highly recommend you guys looking into how to trade with the interest rate yields. Now, when I see yields are dropping very fast, I see an upside play, especially in the morning when things are very volatile. They're driving heavily off of the rates. Also, if there's not a ton of news, that's also what they're going to drive off of. What I did today is I played a little call today to the upside, sold that, made I don't know, maybe 40 bucks. And then I waited to see, when it would start consolidating and then start falling, and then I grabbed a put. Of course, setting my limits to like how much I'm willing to lose. So as soon as I grab my option, I look at how much I got it for. What was my buy? I do limit orders, but sometimes it varies. So I take a look at that number, 200 bucks. I paid 200 bucks for the option, right? It was $2 times 100, 200 bucks, right? So now I'm watching that $2 times 100. It would see where it's going. If it would have dropped to 170, I would have been out. I would have lost 30 bucks. I would have got out because you just got to put a limit to how much you're willing to lose. I'm willing to lose anywhere from 20 to 30 bucks per trade, but on the upside, I'm looking more so for like 20 to 40. So you kind of figure it out on your own, see what works for you. But I'm going for very small plays, and I'm only doing options that are 1 to 3 days out because I like playing multiple options. So I want to be able to play upside, I want to be able to play downside, and they're a lot cheaper, but they move just as much as a 30-day out option. So, or even more so. The only problem is if you can't bag hold with 1 to 3 day options, the theta will destroy you. So you really need to get into these plays and then get out of them. And that's what I love about them, because I can't marry my position. I know I have to get out. So you need to make sure that you're locking in gains once you get them. So I locked in gains here to the upside, and then I grabbed the put once I saw it consolidate a little bit and then start dropping, and I saw rates starting to rise. And then I watched it drop a bit, sold within here somewhere. It kept dropping, and I was like, maybe I should grab a call. So then I grabbed 2 calls right here within this range, somewhere in here. When I saw this green candle, I saw some buying up going on, and I was like, I can see an upside. I saw an upside here. Just based on what the market's doing, it came all the way down, it gapped all the way down, and then it started to bounce. So I was like, I'll see where I can get off this. Let it bounce, and then once it got into this range and then took off here, I sold within this range after this giant green candle right here, and that literally was my day. I was done trading within 30 minutes of the markets, and I had a profitable day. I can show you how much I made today. So Qs, you can see here, and I played both sides. As you can see, there's puts and calls. So I played, I don't know if this is in the exact order. It's not in the exact order. So I played my put. This was my put in the morning, my first play, and then I played these 2 calls. I played a call first, then I played a put, and then I played 2 more calls. I got out of one of them because I accidentally somehow bought 2 of them at the same time, and I'm guessing it's because I put in a market order for one and then accidentally bought another one thinking that the other one didn't go through. So I got 2. I wish I would have held both, but I only like playing one option at a time. It's too much work for me to pay attention to 2. Also trying to sell 2, because I literally, as soon as I buy an option, I literally go to a limit order to sell it, because that's how fast I'm trying to get out of it. I'm literally just waiting for that move to happen, and then once I capture those gains, I get out. I'm literally just trying to call ups and downs in the market and grabbing little gains as they happen. If you can figure out how the market's gonna bounce, this is a great way to trade. Again, I base mine off interest rates, what they're doing, what I see the market's doing. Now, it's not going to work for everyone. It's the way you look at the market. I can't explain all of it because it's a feeling also along with seeing this information. So you're going to have different feelings, and it's just the one feeling you need to watch out for the most is what? FOMO. Just be careful. Don't just because you see a nice bounce doesn't necessarily mean it's going to the moon. It means that it might gap up. It might not. it might, might reach halfway and then gap back down. You just got to be careful. That's why I like these little moves, grab the profits and get the hell out. This is how I've been trading for the beginning of the year, and it's working very well. The one time I FOMO'd, I lost $200. The one time. It took one time for me to lose a whole week of gains. I lost $200. You just got to live and learn. It's going to happen to everyone. But these were my trades. Profitable day. I have some other stuff that adds to this, but I made $125 off Qs just in 30 minutes. That's pretty good earnings within 30 minutes of just staring at the markets and figuring out what's going to happen and just getting your trades in and getting the hell out. I love it. You know what I get to go do now? I'm gonna go to the gym. I'm working on a business plan for a business idea I'm working on. I have a million other things I can work on. I don't want to stare at the markets all day. And I feel like that's what I used to do. And people are always like, oh, what's my next play? What's my next play? Just get your plays in for the day and be done. Or if you're playing along, just, let it play out unless it hits a certain price point where you want to get out. That's all I can really say to you. You really got to avoid the FOMO. But this is how I'm trading and it is working. So that's that. The markets, what I am kind of sad about is if I could have waited a little longer when this gapped all the way up here to 272, grab a put up here. But again, I probably would have got out. I would have got out probably in here. And then watched it, gap back up. And then as soon as I saw this big drop, I probably would have grabbed one in here somewhere and then sold down here. So it's really about the little moves. Don't lock into the big moves. If you try to find every big move in the market, you're gonna either be wrong or you're gonna be right. And then you might accidentally have to bag hold at some point, or you put a stop loss in and then you lose profits because you didn't sell at the highest point of your option contract if it hits the money or something like that. Now, circumstances for how to avoid this, like one thing I would say is avoid being very hyper when you get into the market. Like when you're playing the market, if you have ADHD or anything like that and you just need to keep doing stuff, avoid that as much as possible, where you're just like buy sell. Oh no, what am I gonna do? What's this? What? No. You just gotta play little bits at a time. Try not to be too hype up on the market when it opens. Whoa, look at this move. That's woo. There is a lot of downward pressure happening due to the idea that people don't know what's going to happen with the interest rate hike coming up. They say it might be 50 instead of 25, which is starting to spook the market a little bit. So you are going to see a very sideways or even like downward trend pretty soon. But we will see. I do think the markets are going to head back down here eventually. But I don't know when it's going to happen. I mean, this week we get CPI information, and I feel like that's going to be the day that you're going to see the markets kind of tumble around unless the information is good. If the information is good, we might see a nice little bull run. So keep an eye on that. That is very important. What day is that happening? Let's take a look. That is going to happen Thursday. Thursday, we're getting all our CPI numbers, and then Friday's import, nothing too crazy on Friday. Thursday is going to be a big trading day. So I would highly recommend be careful. Don't FOMO. Play what you can see. Play what you can get. Don't try to reach too high. Don't try to reach too low. Play it smart is all I can really tell you guys. Now, with that said, the fear of missing out, I feel like if you're a compulsive person, you are going to feel this way very often. You need to fight it as much as possible. And when things start dropping and not going in your favor, you need to get out. Don't bag hold. You're going to think to yourself, oh, it's going to bounce. It's going to bounce. It bounced before. Look, here, it bounced before. But what if it doesn't? And then you just lose all of it, or you lose most of it. You gotta get out when things don't move your way. Don't bag hold. That's also a part of the fear of missing out. You're also like, oh, there's gonna be a huge bounce. This can gap all the way back up. What if it doesn't? What if it doesn't? Keep that in your mind. What if it doesn't? What if it's not going to? Just get out. And then look at a new position afterwards. That's why I play multiple options. So if my first trade is not profitable or my second trade is not profitable, I still have an opportunity to look for some more profitable trades. Just need to be a little more patient. Maybe I'm just not getting the right entries. Maybe I'm not seeing the market correctly. Maybe something is happening in news and I just don't understand. You just got to be careful. Kind of know everything that's happening in the market. You can try your best and you're not going to be able to predict where it's going to go every time. Maybe sometimes, or maybe you are good, maybe half the time. All right, so this is just my video on FOMO, how to approach it. Just breathe. Take time to understand what's happening. Take a look at it. Use information that correlates, like yields, the dollar. Look how things are changing in SPY, the Qs, what's happening with like big movers in the market. Like if you want to check Apple, like take a look at Apple. Like right here, you can see like, oh, Apple's fucking dipping hard. I mean, people are saying they see Apple maybe going to 100. So you watch news and see what people are saying about the markets, and also see what they're saying about big stocks like Google, Apple, the tech giants, Tesla, and then also understand what's going on in industries. You can take a look at industries anytime. There's ETFs, and you can see who's doing the best, who's doing the worst. Right now, it looks like healthcare is having a semi-green day. I mean, healthcare has been really strong. I bought some of the ETF just because, like, look how well it's been holding. Like through all of this, look how well it's been holding. It's still at near its highs. Healthcare, until it changes in the US on how it is operated and managed, will always be profitable. It is a huge profitable industry, with your pharmaceuticals to your hospitals. So healthcare is a big one, and it's not going anywhere. Gold having a little love today. It's been getting some love. But yeah, another thing is just look at ETFs, understand what's happening in the markets. XLK is tech, so that correlates a bit with QQQ. That's everything I have for you on FOMO. Thank you guys for watching, and if this video helps you, gives you any insight, or if you have any insights for me, I'm always happy to hear what you guys feel or what you're thinking about the markets, and I'll share my ideas too. Join the Discord. I always put that in the description. I am getting out of here, and I will catch you next time. Stay green.